Hi guys, Aaron here from Alpha Education. Today we're going to be talking a little bit more about what is an ETF. An ETF is an exchange traded fund. Now for so long there's been so many vehicles for investing, whether that be commodities, mutual funds, investment companies, etc. With many people getting into the markets for the first times, there began to become a need for a little bit more of a broader investment option that allowed the average investor, which is you and I, to diversify their assets. This developed the exchange traded fund. An exchange traded fund is a type of investment product. It's traded on the stock exchanges and is similar in many ways to a mutual fund, except that they are bought and sold throughout the day, just like a share from a company. How does an ETF actually work? Now, an ETF divides ownership of itself into shares that are held by its shareholders. The fund itself owns portions of stocks, bonds, currencies, or commodities, which is decided by the fund itself. This allows investors to have a broader range of assets under the one product. So it's like getting a little tiny piece of a huge pie without having to put yourself into one single company or one thing, so that when the markets move, you're not going to be affected by that one typical asset. The most common ETFs on the market track major indexes. This is things like the S&P 500, which is the top 500 of the US companies, the NASDAQ, which covers the tech sector, and etc. However, there are many ETFs on the market. As of 2017, there were 5,024 ETFs traded globally on all stock exchanges. The benefits of buying an ETF are that they allow you to diversify. So an ETF allows you to buy a basket of shares or assets in a single trade. This can help you diversify within an asset class. ETFs also allow you to invest in markets or assets that can be very difficult or expensive to come across. You can also diversify across ETFs, so multiple ETFs, so that there's less chance of loss if a particular ETF provider collapses. They allow you to be transparent, so they publish their net asset value, NAV, daily on the ASX, and this helps you to track how the underlying assets are performing and if the price of the ETF itself is close to that net asset value. They're very low cost, okay? A lot of ETFs have very low management expense ratios, MER, and this is usually cheaper than most actively managed funds. So some ETFs can be as little as 0.03% per annum of management fees, which is incredibly low. They're really easy to trade, so you can trade them just like you would a stock. You can buy them, sell them during the trading hours of any of the exchanges. Now, how do you find out about what is actually in an ETF or what encompasses one of these products? You can download a product disclosure statement, a PDS, that contains all of the information you'll need to know about the ETF. It includes things like what index, sector, assets the return ETF or the ETF return aims to replicate, the fees and costs, so management costs and fees, the risks of investing in that particular ETF, and also what companies encompass that ETF, so you can see what you're actually getting into and what the parcel of shares will be buying. ETFs are by far the best way for the average investor to get involved in the market. So hopefully you've learned a little bit more and you can take action on some of those investing dreams or goals that you might have. Hopefully it helped, guys. If you liked the video, please give it a like or share it with someone that could use it.